You might be watching this because you're trying to decide if you're going to pay points on your mortgage or not. Maybe you're just wondering, what do they do? Stick around with us as we explain everything from buying mortgage points to what a break-even point is and how it helps you on your loan. Hi, I'm Joe Harris with Morgan Financial. I'm here with my counterpart, Lindsay Clark. How you doing, Lindsay?
I'm doing
great. I called you counterpart. Hey, counterpart. How's it going?
Good.
So we're talking about mortgage points.
Yes.
And this is a hot topic because rates were elevated the last couple of years.
Yeah.
And people used points to buy down their rate.
And it is a hot topic because I've actually always heard that points on a loan is bad. Is that accurate or?
It could be.
Okay.
But it's not. For the most part, I mean, I remember there was a stigma tied to points back in the day. And I remember being a loan officer and people, the first thing they would say is, I don't want to pay any points on this mortgage. And to me, I'm like, either they don't know how points work or, you know, they don't want to put any money up front. But to me, it's a function of math. Okay. The math tells me if it's worthwhile or not.
Yeah.
Sometimes it is. Sometimes it's not.
Yeah. So let's start with that in mind. What exactly are mortgage points and how do they lower your interest rate?
Okay, so a mortgage point or 1 point is 1% of the loan amount.
Okay.
So we're going to talk in terms of a $300,000 loan amount for the remainder of this podcast.
Right.
Okay, we're going to talk in terms of $300,000 loan. And on a $300,000 loan, let's just pretend. Okay, this is not today's rate. I'm not quoting rate. Don't try to call us and be like, I want that rate you were quoting.
Asterisk. Yes.
This is just for educational purposes. Right. Let's just pretend on that $300,000 loan, the rate today that's, you know, if you no points rate is 6%.
Okay.
Let's just say, okay? That principal and interest payment on that is $1,799. Now, let's say, Joe, let's say I want to buy a point. Joe, I want to buy a point. What rate can I get? Well, rule of thumb tells me that 1 point or 1% of the mortgage amount will get you typically about 1/4% reduction in the rate.
Okay.
So that payment, let's say the rate is 5.75 at 1 point. Now that point costs $3,000. At 5.75, the new payment is $1,751. Okay. That's a savings of $48.
Right.
Does that make sense?
Yes.
So I paid upfront $3,000. Now I get the benefit of a $48 reduction in payment for the life of that loan. So that on a fixed rate 30-year loan, I get that for, what is that, 360 payments, I get a reduction of $48 a month.
The math is mathing.
Right.
So that actually makes me start thinking about like when it's worth it, like what the break-even point would be on a mortgage when you're paying points. So what would that be?
Okay, good question. So now I look at the cost to get the reduction in rate, which is $3,000. Then I look at the benefit, which is $48 a month.
Yeah.
And if I take $3,000, divide it by the benefit, which is $48, I get the payback, which in this case is 62.5. So that's a little over 5 years and 2.5 months, right?
Yeah.
So if I'm going to be in this property if I say this is my forever home, I'm going to be in this house forever, or at least 5 years, this makes sense.
Right.
If I'm not going to be in this house for 5 years, doesn't make sense.
Yeah,
now
you're not going to recoup those costs.
You're not. You might not. You're definitely not if you're not going to be in the house for 5 years, right? But if you know, like, if you have a reason that you know you're not going to be in the house, I would not do this. Now, let's pretend now that a 1 point this time around got us 3/8% or down to 5.625. I would call that a sale. Anytime you're outside of that 1/4%, it's a sale, and everyone loves a sale.
Right.
But what does that look like? So the reduction in interest rate would get you your payment to $1,727. That's a $72 a month benefit, right? And the cost is $3,000. So I take $3,000 divided by 72, and I get about 41 2/3. We'll call it 42 months, right? So now you're starting to that time frame just got compressed, right? So now it's a lot less time. So if you're going to be in the house more than 42 months, this made a lot of sense.
Right.
And you're going to continue to save that $72 a month as long as you have this loan.
Nice. So are discount points always a good deal, or are there situations where paying points at closing isn't necessarily worth it?
Discount points are not always a good deal. Like, let's pretend that you only got 1/8%, right? Instead of 1/4. Well, now your payback period is going to be significantly higher. Your savings are lower. It's a function of math. And the other variable is, how long do you think you might be in that home?
Right.
Now, that's a hard question for most people to answer. But, you know, we have a lot of our veterans who say, look, I'm going to be PCS, I'm going to change station within the next 2 years. probably won't make a lot, unless you could get a payback period of less than 24 months.
Yeah.
It might not make a lot of sense to do that. You know, some people don't typically live, some people move every 4 to 5 years. Might not make sense for them.
Yeah.
But if you know you're going to be in the house or have no reason to believe that you're going to do otherwise, you can save a lot of money through paying discount points. Like in the scenario, if you're in that house, you know, even the one where it's a 42-month payback, if you're going to be in the house another, 20 months, you know, over that 42-month period, that's a significant amount of savings. And if I had a calculator ready to go, let me see here. So if I had 20 months at 70 extra months at $72 a month, I mean, that's another $1,440 just saved.
Yeah.
Right. So it can make a lot of sense. Now, you know, the refinance itself, if this is for a purchase or a refinance, well, if it's for a refinance, you've already decided this is the right thing for me, and where to put my rate is going to depend on, you know, the closing costs, how long you're going to be in the house, and the break even, and all these things. But when you're purchasing a home and you're trying to decide, should I, when I got to buy this home, I got to get a mortgage, which rate do I want?
Yeah.
I look at how much it costs to get that rate, what the benefit is, and what's the break even. And our loan officers here do that every single day for the clients to help them find the right rate. Sometimes it doesn't make sense. Sometimes it makes a lot of sense. You just have to have a good guide walking you through that to Sherpa your way to the top there.
Sherpa is right. I was going to say you just have to have somebody that is knowledgeable and can walk you through it.
Correct.
And can tell you when it's not a good idea.
Yeah, they need to be honest with you and say, most loan officers, I mean, really, they don't get paid based on what rate you take. They get paid typically on the volume or the size of the loan. And so it doesn't behoove them to, you know, trick you into a lower rate or something like that. I don't, that's not really a thing. You know, a lot of people think that, and they say that, I don't want to pay points, because they think it goes right into our pocket. Yeah. And it doesn't. It goes to literally buy down the interest rate to get them a better rate.
Yeah. Now, so if you could sum it all up then, what is truly the advantage of buying down your interest rate?
It's a way to get a lower rate by paying an upfront premium now to get a lower rate for the life of that loan. Okay. There's other things like temporary buy downs, which I'm not a big fan of, quite frankly, but this is a permanent buy down. In other words, as long as you have that loan, if you do a permanent buy down, you're going to benefit for the reduction in rate.
Awesome. Well, that's all I had for you.
Okay, cool. Well, again, if you have any questions on this or if you want some advice, please put comments down below. There's an easy means to contact us down below as well. And we'd love to hear from you. Make sure you like and subscribe and all the things that the kids say to do, right?
Yes.
So thanks again for watching. We'll see you next time.